Welcome to today's Dojo Pod. What's that?
I was laughing at your full mouth, but GM, how's it going, Steven? Markets are up. It's exciting. How are you feeling? I mean, look at that. Look at, is that the ETH? Is that the ETH BTC chart?
Delta. Go ahead.
Is that the ETH BTC chart? Why does it look?
ETH BTC chart. This is, I mean, we all have known for a long time that ETH has just been really bullish against Bitcoin. So, you know.
Ooh, wait. I don't like it a lot less now that you've done that. It looked really good from the beginning of May until today. If you go back any other period of time, it looks rough. But yeah, I mean, markets are up. Do we know why? I'm like,
no, you never
starting to lose track a little bit.
I don't know. My own opinion was that there was some Elon Trump bread and circus blew over, and they used that as a reason for markets to pump. I have no idea. I try not to think about it because, as our buddy in the dojo always says, the charts are a aggregation of all market sentiment and news. So I look at the chart and I say, okay, market sentiment and news is trending up. And then there's no specific reason why.
Huh, that's some great analysis right there. Yep. Well, crazy enough, I mean, ETH is up 10% today, or 9% or something. You know, I feel like as soon as those words leave my mouth, it's going to go back down to flat for the day or negative or something like that. But
ETH pumping is the cursed price movement.
I mean, it is outperforming BTC, Sol. You know, the only things it's not outperforming are things like hype. Maybe ETH is a new hype. That could be the real thing that's happening right now.
Yeah. I mean, hype is what, like $40?
41 or something like that. Yeah.
Incredible.
Yeah, they're doing well. I definitely send a lot of love to all the hype boys out there. Don't forget to take profits, but you know, congrats on all the success you guys have.
No, they take profits in their other things into hype.
That's true. Yeah, that's why.
Don't look at this. Don't look at this. This was me. Yeah, I mean, this was a good sell or a short. Yeah, I didn't do too bad, I guess. But don't look at it. Yeah, so Hyperliquid. Congratulations to them. I'm waiting for Hype EVM. Also, obviously, waiting for that NFT that will hopefully someday come.
Wait, they did come, and they were selling for like 60 grand or something like that.
Yeah, but they're not here.
I thought that they were here and they were being sold. Or how are some being sold, but not everyone gets them?
OTC. People are selling them OTC.
Oh.
Yeah, so you have to escrow like the value of your NFT.
Got it.
That's. I mean. Unless something has changed, but as of yesterday, the NFTs were still not live.
Hype.
You maybe think about the other NFTs. There's like Kato something NFTs. I don't know.
Oh, there was those. Yep, there was the Kato ones. No, I think I'm talking about the Hyperliquid ones. But Hyperliquid's like the only place that can get away with stuff like that. Like I remember people like OTC buying points for wild valuations. Those people did great. And then apparently also OTC buying and selling of these like magical NFTs. So congrats to them. I don't know if you've spent much time looking around the Hyperliquid L1. I've been certainly like, you know, paying a little bit of attention to it. I think people are starting to warm up more and more to the idea that there's going to be season 2, and like anyone knows like what they need to do to be eligible. My sense is probably like trading. It's probably the things that like, you know, like spot trading, perp trading, maybe interacting a bit like on the L1, though I think like the criteria around that are certainly no one knows, but like it's hard to kind of predict.
Well, we were told by well, I don't know. We were told by the marketing team in Colorado that the number one way would be to, well, obviously trading, but number one way would be to interact with the L1.
Is it? Well, that's exciting. Obviously, things like Felix have done fantastically well. These are, what's this?
No, sorry, it was staking. Staking was the number one thing. Yeah, staking and then interacting and then trading.
Which does make these like leveraged staking loops like pretty interesting. I was looking at a leveraged stake loop on Sentiment, which is like a money market over there. That looked pretty interesting. But yeah, I mean, Felix is blown up. It's very interesting to me to see these kind of like liquidity forks, friendly liquidity forks doing super well, like Barabaro and Felix having hundreds of millions of dollars of TVL. Though to be fair, you know, like Felix I think is a bit more than just like a friendly fork of liquidity. They also
so is Barabaro though.
So is Barabaro. Yeah. No, absolutely. But like Felix also is like what? Like they're like a front end for Morpho, or they have like some sort of Morpho integration or something like that.
Oh, do they?
I believe so.
So maybe that's the vanilla model?
I think so. Yeah. See, powered by Morpho right there.
Mm-hmm. Yeah. Oh, cool. So they have a CDP model where you can mint the asset, and then a vanilla model probably where people are lending the asset for some other APR or something.
exactly. And look at those.
Oh no,
profiles.
it's USDE and USDT 0 or
Yeah.
USDT.
I wonder, can you, like, what do the earn products look like? Can you lend out USDE for 23%?
Yeah, so this is for the vanilla market,
Oh, pretty good.
17%, which is pretty good. And there's 16 million deposits there, so it's not like it's empty, you know?
Yeah. Yeah, that's pretty compelling for sure.
Yeah, and potentially Hyper EVM airdrop compatible or like qualifyingable.
That's what I was thinking, right? If I can get paid 17, 18% and potentially qualify for an airdrop, that's pretty juicy.
Yeah.
I'm going to spend more time looking at Hyper EVM over the next couple of days, and maybe next show we'll come back and we can have a little focus on it. But I think
One of the things I wanted to mention, just by looking at Felix, is that a lot of these bold liquidity V2 forks, like Bear Borrow, like Felix, are obligated is the wrong word, but they've committed to giving 4% of their airdrop to liquidity V2 as a like by virtue of being a friendly fork. That's part of the deal. So they get support from the liquidity team, but then they get 4% of their FDV to liquidity, and they incentivize two things. One is LPs, so it's like, you know, maybe it's the bold. Do you know what Felix is? FEUSD, right?
Yes.
Yeah, there it is. Yeah, so like it may be the bold FEUSD LP, it may be just the bold USDC or LUSD LP, but like roughly half of that, or around 1.75% of the 4%, is going to go directly to just airdropping the stability pool. I did a post yesterday about how this, you know, there's 20 of these friendly forks, or at least like 15 known ones and 5 that are being built or about to go live. If all of those are giving out 1.75% of their FTV, that should be a pretty decent, like, you know, consistent additional APR that you're seeing there. And the reason why I'm excited about this is because the stability pool, well, two reasons. One, the stability pool became composable recently with Yearn and K3 launching their own wrap versions of the stability pool. But two, because these things are coming to Pendle or Spectra really soon, and people are going to have to try to value those airdrops, which is going to be a lot of fun. But there's 20 different airdrops that you're entitled to. When you're going to get those, no one knows. How those points work, no one knows. And they're also going to have to try to value the liquidation. Because, yeah, maybe you're getting a 5 to 10% base rate from the interest that people are paying to mint and borrow bold. But how do you value black swans? How do you value liquidation days?
Yeah, fascinating. I love, I mean, this is like the beauty of Pendle, right? It's Pendle allows us to speculate on all these like weird and wonderful things that are only possible in DeFi. But the idea of the YTs where you get exposure to 20 different airdrops, and some of these things I think could be pretty big tokens, right? Like Felix, they've got like $400 million. Bear Borrow is.
Did you say 400 million? Oh my gosh. Do they really?
I think so. I mean, let me.
They should say why. I love when protocols say their TV on their front end. Come on, man.
All right,
Chill your product.
Let me fact check myself there.
Stats.
See.
This has got to be it. I mean, almost 300 million. Pretty good.
According to according to DeFi Llama, it's 319. I don't know why that is different.
That's collateral plus borrow, but usually DeFi Llama nets that instead of adds to it.
Yeah, I don't know. That's what DeFi Llama says. And then if we go look at Barachain, I don't know what. Oh, there's Bear Borrow. Bear Borrow's at 440 million according to DeFi Llama. So
Bear Borrow already has a token. I don't understand that one really.
yeah, and their token, like, I don't know, it hasn't
Isn't
been
good.
recently. But anyway, my point is that like you say 20 protocols, you can kind of like blush that off and say, oh, these are all going to be not super interesting.
Right.
But I think some of them are. Like, we've already seen some of these become quite big things. There was also another liquidity fork that launched, I think, in the last week called Ibisu or something that already has, I want to say, like $50 million in TVL within a week. So for some reason,
there's one on Ethereum.
yeah, these things are just like liquidity magnets. I don't understand exactly why it is they're so attractive, but it's fascinating. And I think, you know, participating in S bold and Y bold as a way to kind of express that, the growth and interest in stablecoins is very interesting. But Stephen, I'm embarrassed to say I don't quite understand the difference between S bold and Y bold. Will you just like break it down for me? Like, what are they exactly, and what's?
No, I'm trying to find what does a urine icon look like? So I have it up here somewhere.
It's right there. You just
There
passed
it is.
Yep.
Boom. Okay. So you know that S bold and Y bold are both wrapped versions of stability pool. The question is, what makes them different from one another? And the answer is, I don't know. The person who mints them, the person who issues them. So Y bold is just Yearn's version of the wrapped stability pool. And the major benefit of the stability pool is that it participates in three things, right? One is just the base APR. So whatever bold is borrowed the user is paying an interest on that. That interest just gets passed on to the stability pool depositors, and because more is borrowed than is deposited into the stability pool, because people are also just using that bold or selling it and then turning into USDC or whatever they're doing. Because most people are not actually staking that in the stability pool gets a leverage exposure to whatever the average borrow rate is. So that's between 5 and 10%. That's yield source number one. Yield source number two is the airdrops we talked about. So 20 different forks, friendly forks, all have an obligation to give 4% of their FDV to Bold, either through the LPs or the SP, which is stability pool. We're assuming 1.7% of that 4% is going to go to the stability pool. That's an interesting additional vertical for their yield. The third one, which is the one that I like the most, is black swan events. Or liquidations. So Y Bold and S Bold, what they do is when there's a liquidation, basically what the stability pool does is it uses the Bold in the stability pool, that's why it's called the stability pool, to purchase the liquidated assets at a discount. But these wrappers, they immediately sell that discounted purchased ETH, RETH, wrap staked ETH back into more Bold. So they're realizing that profit immediately. And sometimes these profits can be 1%, 3%, 5% just from these immediate liquidations. So that to me is big. I think that's one of these verticals that people don't really think about. And so I also have no idea how to quantify that, because this is DeFi. We tend to get 3 to 5 black swans a year. Maybe we're getting fewer of them now that, security is better and AI is so robust that we can audit things with a million different tools.
But we also have, a government that is very volatile as well. And so we may be getting less kind of catastrophic black swans, but we still have a ton of volatility, right? There's still huge market swings back and forth, which is,
but you need crazy swings to get mass liquidations. You need those 15% days. Like just recently, we went from 110 back to 101, right? Something like that. And so that's I guess a 9.8% decrease. There was no liquidations on liquidity. So yes, we do get these really volatile swings, but you need to have those crazy sort of days that feel catastrophic where everyone's scrambling.
Just wait for people to get a little bit more euphoric, add to the leverage a little bit.
That's
people
right.
Are cautious right now, but it'll come. Don't worry. Just real quick though, so I understand why Bold, Urine, very familiar name. People.
K3,
interested.
Right?
Well, who's K3? I don't know anything about them.
Yeah, so K3, if you're deep in the curator trenches, K3 is a curator. They're going to be curating on Euler if they aren't already. They might already be. They're already curating on Gearbox. They were the premier curator on Gearbox. So when Gearbox went to the curator model, that was K3. So they're sort of sourcing liquidity, feeding liquidity into Gearbox for people to lend and borrow, and they're benefiting from that in some sort of ephemeral way. I don't really know how these curators make all their money. I know some of it's they have off-chain hedge funds that expect some rate. They can get a better rate on-chain for lending. So K3 is going to be the curator, and it is a curator. They're the ones who issue S-Bold, and the additional benefit of a curator being the issuer of S-Bold is that they can just go to any curation-based money market, Morpho, Euler, now Gearbox, and say, hey, we want to throw our asset over there because we benefit from probably some take-up fees, and then leverage it against our large cachet stablecoins that we can pump into these lend-side markets. So I'm hoping that's what happens. I know they're coming to Euler very soon. S-Bold is, not Y-Bold. And yeah, I think that'll be interesting. Now, I'm in this weird place where I typically don't like to bet on the invisible yields, the yields that don't exist yet. So if I'm looping something up, I want it to already be a positive loop. I want it to be organically positive, and then anything on top of that is just a pleasant surprise or a happy addition. I don't like running negative loops. We did a lot of negative loops back in the day. I know you remember this back on Fluid with Wrap Etherify ETH, borrowing Wrap Staked ETH. We probably ate 10%, 20% of our principal betting on those season 1 airdrops, and they did okay. I think most of us broke even, but I don't do that anymore. I'm pretty sure you don't do that either.
I don't. Yeah, a lot of PTSD from the old Fluid days with Etherify. I think it was actually season 2. Everyone got really hyped up.
Oh yeah, season 1 was so good.
It was so good. It really, if you've been doing it for season 1, you made a lot of money. If you try to do it for season 2, you broke even to slightly negative. But yeah, very painful. Maybe a discussion for another day, but interesting that if you live in the United States, I'm not a tax professional, but from what I understand, you can, there are some interesting tax things you can do with high borrow costs that you end up paying, especially if it's net loss. So
yeah, I don't understand them either, but I know we've talked to people that do understand this really well. But it's like whatever interest you pay, you can somehow obfuscate something.
Right. Anyway, we don't know enough about that.
I don't know enough, but someone, if you guys know in the comments, please explain to everyone like we're all five.
Yeah, but I will say like positive loops definitely are the way to go. And there's so many of them these days. Like, there's so many positive loops that also have like a little dash of something else interesting on top.
Ooh, I love it. I love it.
Which one do you love?
Okay, both of these.
Okay, tell me about them.
So let's start with the newer one, because I don't think a lot of people are familiar with this, which is the Falcon loop. But so I know that our eyes probably all go to borrow rate first. Go ahead and check the instantaneous. That's what I always do. So instantaneous is 4.23. That's the actual real time right now borrow cost. Borrow rate, this is typically like a moving average of some sort. I don't know if it's a 1 day moving average or what. You can see there have been spikes all the way up to 9%, and then it goes down. This is a positive loop. Well, it's a multiplicative loop at anything underneath 8%, because the Falcon stablecoin, stake stablecoin, gets around 8.2% APR. And you always got to think in APRs, not APYs. So here you can see like top of the kink is 9.5. You don't want to get there because you're running
how do we get to 10 if the top of the kink is 9.5?
9.5? Well, no, we got 9.56 exactly.
Got it. Okay.
But this is a weird thing, because when I first looked at this, the top of the kink was at 6 point something. So one of two things is probably true. Either there's some sort of time component here where if it stays above the kink for long enough, the whole interest rate model goes up. That's what I think might be the case. I'm not sure if that's the case. Mm-hmm. The other thing is maybe the curator I know the curator can't change it, because we've dealt with this problem in the past where curators have to put a totally different market if they want to change the kink rate.
Unless Morpho learned from that mistake and has changed things, but I kind of doubt that they have. I don't know. So wait. So this is yield-bearing asset. Yeah. It's I'm borrowing 4% against 8%, so it's 4% arbitrage. You can this is the insane part. If you wanted, don't do this, but if you wanted, you could do 20x leverage, right? So 95% LTV. I am close. I'm at 93% LTV, which is probably somewhere around 13x leverage. You could do 20x leverage, and so let's just quick math it, right? 8 times 20 minus 19 times 4.23. That would be 80% APR. Which is nuts. It's crazy. Now, of course, it wouldn't have been so nice all of these days and all of these days. In fact, it's probably negative these days and negative this day. So, I don't expect this to stay the same, but there is some liquidity in there. It is a cool loop. I do like it. So there's that. And you're getting points on top of it, probably. Well, let me just add a stronger caveat to your caveat, which is this is a small market. There's only $5.5 million total borrowable in here. And there's currently 400,000 that is, at the time of recording this, available to borrow. But as soon as someone does decide to borrow more, it's going to shoot that kink up.
It goes up
even higher. And so, this could turn into a negative loop, right? Like we were just talking about.
Yeah, so definitely don't go max leverage is thing number one. Because even though this is an exchange rate oracle, which we are fans of, I mean, I can't tell you how much I love exchange rate oracles. Even though it's an exchange rate oracle and you're not going to get liquidated through market price, you could very realistically get liquidated just through the increase in interest rate if you go max leverage, because you're a hair's breadth away. And so if on one day you end up having to pay roughly, instead of earning 10 bips, you have to pay 10 bips times 20x leverage, that's 2%, which is nuts, right? So if your collateral takes a 2% hit relative to your debt, or if your debt increases by 2%, that could liquidate you or partially liquidate you. So you don't want that to happen. I would not recommend max leverage, but I'm 3% away from LLTV. I'm fairly confident with that. Again, like 12 to 13x leverage. Also, I've cheat looped in, so I also have funds on the side in liquid positions, so that if I have to pay this back rapidly, I can. And Mara and I always say, have some portion of your stablecoin portfolio or your portfolio period in fully liquid positions that you can either withdraw from, like an Aave lend position, and immediately repay your debts if they ever get risky or dangerous.
Right. Yeah. All right.
So anyways, I'm getting probably around 45% on this one. I'm happy.
Nice.
The second one is one that we've been in forever,
Yeah. Good.
which is SRUSD USDC. Now, let's go to instantaneous because that's where I always look. Beautiful. Love to see it. 6.73. So I know off the top of my head that this is also at 8.13 APR. So let's do that. I'm at 10x leverage. 8.13 times 10 minus 9 times 6.73. So I'm getting 20% APR on this. And I have, I've been in this for, it feels like over a quarter. I don't know how long this position's been open, but it feels like a really long time. Actually, I can tell you. When did I deposit first? 610? No, that's not right.
Can you just explain to me real quick why
This isn't mine.
why are you in the like borrowing USDC rather than borrowing RUSD loop version of this?
Oh, more points. So you get more points in this version. And for me, I'm bullish on the points. We just saw Resolve launch 210 to 230 million FTV, which some people might not think is very bullish, but I think it is because their TVL is 350. So if Reservoir launches at a 2/3 FTV to TVL ratio, that would be huge for anyone who was doing the loops. It would be huge for anyone who did the YT purchasing for season 1. And I think it'll even be huge for anyone who's just in these loops, farming points for season 1, who farmed points season 1, and then for season 2. So I'm tentatively excited about that. We will see what happens.
Yeah, interesting. I think it's, we've had this benchmark where, in crypto, everyone does comparative analysis. Like, it's very hard to create like a real, oh, this is worth this much, that's worth that much kind of thing. So what everyone always does is it's like, let's compare. It's, Bitcoin against ETH and then ETH against Sol and whatever against whatever. And so in stablecoin land, we really only had Athena as kind of like being one of our big benchmarks. We also now have Circle, which has been super interesting as well. That has been done wildly good. I mean, I think it's trading at like $130 or something like that.
What is the market cap of that?
I think it was like, it's a lot. I think it's like, is it 17 billion? Something like that. Let's just go see.
Why hasn't someone built an Amazon, like an Amazon Alexa that just taps into one of these LLM models?
Yeah. I think it's around 18 billion is what I'm seeing.
Yeah.
So it's a lot. And Athena's still worth a lot. So anyway, we have more data. We have more, like, now we have Resolve. Resolve is like, another data point for us. I think today's gonna be super volatile. Like, it was all the way up at 300 million. Now it's down at 190 million. I bet you we get a bounce at some point after like a lot of people who, sell want to get out. I mean, that's the problem, right? Like, people have been farming this thing for a really long time. People have like all this kind of locked up potential yield. Maybe there's people that even like spent money to earn these points, to earn these tokens. You end up having just kind of like a huge amount of sell pressure early on. But I think Resolve is a good one. And I think that like potentially this thing can recover, and, they really are building an interesting and real product that does generate revenue and stuff.
Well, one of the things that people don't appreciate about Resolve versus Athena, which I think is their biggest competitor, is let's go to the dashboards. So they're running a basis trade, right? They're running the basis trade on ETH, and they're getting yields on their ETH. So congratulations to them. That's really good. They're also running the basis trade on Bitcoin. So they have ETH basis trade at 41%, doing probably really good today while ETH is pumping. Bitcoin basis trade, which has done really good historically. And then they're also in some stable coins, right? So 20% of stables. And then, so this is a similar profile to what you see on Athena, where they're running the Bitcoin basis trade, mostly ETH basis trade, and then some stablecoin stuff with T-bills. But the difference is they have a junior tranche, whereas Athena doesn't. So what that really means is if there's any cost, any negative funding, any like hits to the underlying principal, RLP eats that up, which is why if you go over to RLP, you can't see it like very, very technically, but there are some days where RLP will go down to, here we go. So this was, technically up, but if you look very granularly, there are days where RLP can go down because it takes on leg risk, it takes on fees, it takes on whatever cost the protocol may have. This junior tranche mechanism also means, and this is nuts to me, that USR, right, the senior tranche, has $132 million of an insurance layer before the peg would ever get hit or touched. That's amazing to me. That's something that Athena doesn't. Now I know Athena is trying to build up they have this security fund or insurance fund or whatever it is, and they build it up through a take of fees every so often. But RLP has nearly half the protocol. I mean, a little bit less, maybe a third of the protocol as an insurance layer for their stablecoin. That's awesome.
Yeah, absolutely. No, I think that we're going to see more and more of these types of systems that, tranche or break up the risk that people are taking on. And then also kind of like differentiate in terms of like, okay, you're taking on more risk, you should get more return as well. So I think it's super interesting.
14%. That's awesome. That's really good. Yeah. And so like Infinifi also just did a tranche protocol.
Yeah. Well, should we dive into that a little bit? Take a quick look.
Yeah. I know you hate when I type in links. Let me see if I can find their, okay, here we go. SLP. So Infinifi, similarly, they have their, okay, so you have to think of these things in terms of senior, super senior, and then like, more junior tranches. The more junior tranches just effectively take the burden of first loss until they're gone. And then finally the super seniors can get hit. So super senior just means the unstaked version of the senior tranche. Senior is the staked version of the senior tranche. And then junior tranches are any tranches beneath them, right? Now, historically, in like CDO tranches, which are really scary, they did really well until they didn't, when a lot of people were financing subprime mortgages. Don't do that. Luckily, we don't have those on chain yet. But there's also been a middle tranche called the mezzanine tranche. Now, we haven't seen mezzanine tranches yet in DeFi, but I'm sort of looking forward to those as well. So anyways, Infinifi has a senior tranche, right? That's getting 7.47% APY, easy to enter, easy to exit. I think it's denominated in USDC. Then they have their junior tranches, but their junior tranches are a little bit different than Resolve's junior tranche. So Resolve's junior tranche has, a bouncy peg, but solid product, has 15% APY, very similar to the APY here. But it's all based on basis trades. So basis trades are, I don't know, I call them like highly partially liquid. They're virtually fully liquid, but exiting a basis trade can be painful if you have to do it all at once. I know there's really robust like institutional tools to do this without hitting different costs. I don't know if it's just like OTC or whatever it is, but we've actually talked to a long time, many years ago. I don't know if you remember that. We talked to like a data team that built tools for centralized exchanges specifically for like basis trades and mitigating leg risk. Anywho, those institutional tools exist, and I'm sure Athena and Resolve are using them. But what Infinifi has done is they've said, okay, lock up for 1 week, lock up for 4 weeks, lock up for 8 weeks, because a lot of the underlying strategies are Pendle PTs, and this mitigates the duration risk for Infinifi, while also giving you a boosted exposure as a more junior tranche to the total yields. Do you think that's a fair representation of what's going on over there?
Yeah, I think that's a great representation of what's going on. I think that it's very interesting to see the transition from something like Resolve and some of these other kind of like tranche systems. Even Falcon actually has like some level of tranching where people are, willing to lock up their tokens for longer to receive a higher yield. I think Infinifi does this kind of the best. It's like the most well thought out. I think it's like the latest iteration of like quite an interesting system. And, typically in DeFi, what we've seen is like people just like lock up their assets and they just get a higher reward, but it's just like a duration risk that they're dealing with. I think also putting the spin on of like senior and junior tranching is very interesting as well, because as people are, like taking on more risk, they should also be receiving more reward. And instead of like the last cycle or 2 cycles ago, of like taking on more risk, you get more reward, would just mean you get more inflationary, high yielding like emissions. In this case, it's a much more sustainable system where it's actually the underlying yield just being divided out into different groups. But speaking of which, they do have a pretty interesting point system. From what I understand, they're going to be giving out, I think, a pretty healthy amount, something like 5 or 10% of the total supply in an airdrop. So, this is one that I'm interested in farming. I think that they're going to have like, different LPs all over the place. One is, on Fluid, there's like smart collateral, which I think is kind of interesting. But in the future, I think we're going to see this popping up on different money markets, on Pendle, maybe on Spectra. Do you know, though, like where exactly it is available to be, used in DeFi today? Or is that still a bit early?
Well, I'm not sure about today, but I do know that they're going to do an announcement this week, probably. But whoever knows how announcements actually happen versus what you plan to happen, where they're going to effectively announce Pendle integration. So that's huge to me. You can already play with them on, as you mentioned, the Fluid as smart loan, not smart collateral or smart debt, but a smart loan. Other places, I'm not sure. I mean, you would think they'll probably put it on the points dashboard eventually, but I mean, I think they're thinking, who knows? But most of these points protocols are 5 to 10% over a 6-month time frame. So if they target that, we're going to see what people think about Infinifi very soon, represented on the like Pendle IY. or Spectra IY. They're going with Pendle. So that should be fun. I'm hoping.
This thing's been around only for like a week, and they're already almost at $20 million in TVL. I mean,
Well,
good for them.
Not
right?
only that, but like $20 million in TVL and a Pendle integration. Like, that's nuts.
Yeah, they're cooking, man. It's exciting stuff.
Yeah, they've definitely been in the composability trenches. So it's been great. But I know we've like mostly waxed on stablecoin yields. We haven't talked about Bitcoin yields.
Well, throw it at me. What are we looking at?
I'm trying to find Merkle. Actually, two things. First, let's go to Raex. I think I mentioned this last week. I still like it. It's still mind blowing. And let's see, did they get any more liquidity? Yes, 28 Bitcoin liquidity. Awesome. Okay, so that also gives me some more confidence that this IY is more accurate. So on Raex, on Solana of all places, there's 28 Bitcoin of liquidity, and you can get a fixed rate APY of 12%, which means you can just lock in a 12% yield for the next, let's see, where's the expiry? 79 days, 80 days. Yeah, roughly 80 days. You can lock in 12% fixed rate APR on Bitcoin for the next 80 days. That's awesome. That's incredible. Like I know there are a lot of other Bitcoin yields out there, but they're very volatile. They don't tend to last as long. So like you might say, where is the yield coming from? And that's a question you should always be asking. As far as I understand, Frag BTC is backed by Solve's Jupiter BTC or solvebtc.jup, which basically neutralizes the volatility of JLP while benefiting from the yield, and then all that's borrowed against BTC collateral. So BTC collateral, borrow, JLP neutral strategy, and then so that turns the BTC into an interest-bearing form of BTC. That is then wrapped by Frag. Frag is a restaking protocol, and you're getting Frag points on top of that. That's where the additional implied yield is coming from, is the additional points. And yeah, so I think that's really cool. I like this. In terms of fixed rate BTC, I haven't seen anything better since maybe the pre-deposit campaign on Barachain. I forget if it ever got to 12%, but I think it was double digit. So yeah, love that. And then there's a bunch of stuff on Merkle, just a whole bunch of stuff on Merkle, mostly related to Solve is what I'll say.
Yeah, Merkle's got a lot going on, but what are some of these like higher yielding Solve BTC loops?
It's all Rootstock. So Rootstock is still pushing this campaign, and the rewards are in their wrapped Rootstock BTC. So as far as I understand, Rootstock BTC is the native Bitcoin asset. It's like the chain asset of Rootstock. I think Rootstock is, I forget if they're like a side chain, if they're an L2, but they're definitely EVM compatible, which is the cool thing. And so wrapped Rootstock Bitcoin is like their coin, like the coin of the chain. And it is a wrapped version of Bitcoin. They are giving rewards out in that. So it's not like some governance token. It's not like some weird, like ephemeral, maybe you'll get these points in the future. Cough, cough, look down here. But they're giving out, between $200, which is not a lot, to $15,000 a day. And the APRs are between 65 and 20%. So these have been going on for a while. And if you're ever wondering, good.
$30 million in it.
$30 million in it. Yeah. Well, the one above it has $3 million in it. So there's some deep liquidity for between 20 and 30%. Now, of course, what you're going to tell me probably is that it's dependent upon what?
Well, click on it. Click on the one that's got 30 million. Let's go take a look at like the parameters that are set for how they distribute. So it could matter. So this is actually not bad, right? So if I'm looking down at the bottom there, it says rules. It says 20% is distributed based on fees. So that encourages people to be super tight. The tighter that you are, the more fees that you get. But they're also giving out for the ratio that you have, right? So it's 40% distributed for the amount of Solve BTC you have, and it's 40% distributed for the amount of X-Solve BTC that you have. Now, that just encourages people to deposit liquidity and not be insanely tight like we've seen in some other places like Uniswap Chain. So this is pretty good. There are also all sorts of little games that can be played. For example, like if there is a higher ratio of one asset over the other, people, it's better to be LPing that thing that's more rare in the LP, that's harder to get because you're getting a higher APR. So there still is kind of gamification that's going on here. There still is pieces, around being relatively tight that, that like you can get higher fees. But really the game with this one would be relatively tight, not like insanely tight, like a single tick or something like that. Be a few ticks like tight. Try to have a ratio of roughly 50-50 of the two assets. And you're probably going to get, you're not going to get that full 20% unless you're like super duper duper tight, but you'll probably be getting above 10%, I would guess, or something around 10% potentially.
Yeah.
So I think this is actually a pretty compelling place to go yield farm for Bitcoin because there's so much TVL, $30 million in TVL, and because these parameters have been set, actually has some thought put out into them. Whereas sometimes you go out there, I don't like to throw shade at Gauntlet, but because I do actually really like them, but Gauntlet sent some crazy parameters when they first launched on Uniswap chain for this that were like, literally just encouraged everyone to sit in a single tick of liquidity on stablecoins and other stuff like that, which is really inefficient and just becomes like kind of negative spiral where people get like turned off. I think that something like this, whoever kind of thought of this liquidity campaign, it makes a lot more sense. So I think this is a good one. I think some of the other ones probably are relatively similar. So, it seems like Rootstock and Solana, surprisingly, interesting places to get BTC yields.
Yeah, you mentioned something that we don't see a lot, which is that the fees is such a small portion of the way the APR is. Typically, what we've seen is fees are 80 to 90%, so it's totally dependent upon how tight you are. Whereas this one is just like 80% of the yield is just based off how much of the assets you have in the LP. 20% is based off how tight you are. So that's cool. Let's see what they have for. I think the other one that's kind of interesting is the 3 million, because anything over here, literally one Bitcoin would double the TVL and half of the APR. But let's go look at the $3 million one. Same thing, 20, 40, 40. So that is, I'd say, I don't know if it's healthier liquidity, but it's less crazy, less manic liquidity. You're going to not have liquidity that's like fighting for that single tick all the time. You're going to have more stable, probably a little bit wider liquidity that's really benefiting from these incentive campaigns. So I don't know like how much that 20% will affect everything else, but if you could get 20%, right, for a while. Here's the annoying thing though. 6 days left. It's so hard to get a hold of these teams to see if they're going to, do another campaign. But look at this, right? This one ended a day ago. This one ended a week before that, 2 weeks before that. This one ended a week before that. So it looks like they have been renewing these for some time. And if they continue to renew these, we should continue to see some really good APRs on Bitcoin over on Rootstock. And I think that Rootstock just got an integration with, wasn't it Layer Zero that you can just go and push right through there?
I'm not 100% sure. I know it was a real pain to get over there and out of there before, or especially getting
Layer Zero. Let me check.
But if they have Rootstock, if they have Layer Zero now, then that's fantastic and make things a lot better.
Oh, I don't have that. I have to get the link for it.
Here, I'll send it to you.
I know, because DeFi Llama, we'll just be stuck in there for the next 10 minutes.
Sweet. Well, those are some interesting yields there. I like that.
Yeah, but so like the main thing that you want to think about if entering these positions is one, bridging. Is bridging easy enough to get over there without, massive slippage? And I think the answer is yes. I'm fairly certain that they just got an integration with something either Layer Zero exactly or something like Layer Zero. We can just a Stargate. There we go. That's the what I was looking for. The Stargate bridge. Let's just check.
Stargate just redid their whole UI.
I know, which is cool, but also, why can't
cool,
I
but it's
search?
like confusing. Yeah.
Yeah. I mean, there's so many chains, you'd think they have a search feature. Rootstock, there it is. Yeah, it's Rootstock. So they do have Rootstock. So maybe you go from ETH. You can't search the asset. That is not a good UI.
Doesn't it say search?
Oh, yeah, it does. Okay, you're right. Kind of.
Wait, what happened?
From search token. You just have to learn new UI. So, I'll take the L there. And I can search destination token. Let's do
BTC
on. Okay, yeah. Can I search destination network? There we go. Rootstock. All right. You know what? I take it back. I love you.
Can't do it. It doesn't let you.
But what do they have? They have Sol BTC. So you can just take your Sol BTC over there, which is great because that's the thing that was being paired with. So let's take Sol BTC. Let's take Sol BTC from Ethereum. And let's do one. And let's see. One. Beautiful. Okay. So 1-to-1 via Layer Zero, taking your Sol BTC over there, which is half of that LP. So half the LP, if we go back to Merkle, which is so many tabs. Here, Sol BTC, you can bring that over. Now, how you get from Sol BTC to wrapped Rootstock BTC, that's the thing you want to consider because that might take a BIP, right? Though, there's $30 million of liquidity between Sol BTC and, it's XSol BTC. Interesting. And XSol BTC. So this should be easier. This should be easier to go from Sol BTC to XSol BTC. In fact, actually, I don't know. Probably you can't get XSol BTC over there through Layer Zero. But if you can bring both assets in whatever pairing you want and then just structure your liquidity that way. And at a 5 BIP fee tier, you're going to have some degree of granularity. So anyways, that's the yield that we've been looking at. There's so many more. There's always money in the banana stand. So thank you guys so much for watching, and have a wonderful rest of your day.